Good day, ladies and gentlemen. Welcome to the show on this May 12th, Tuesday, May 12th, 2020. Let's open it up. Let's get the chart started right here and take a look at what's going on. Now, listen, guys. There's been a dollar short squeeze, for, somewhere in the vicinity of about $14 trillion that the world needed to satisfy this enormous demand for dollars. And, an awful lot of these countries are in debt and they have to pay back in dollars because it's dollar denominated debt. Now, here's the thing. This short squeeze in dollars is being satisfied to a certain degree. And you know what's really strange about it is the degree that we're through the virus is similar to the amount that the short squeeze is being satisfied. And this virus is pushing the Federal Reserve and the ones who actually create dollars into creating far more dollars. And this creation of, they've just created 6 trillion. It's still being absorbed because of the deflation that's occurring, with the economy deflating and stuff. They're really not doing enough because the dollar has now went exponential. And so they're really not doing enough yet. But I can see them increasing it as the economy starts to collapse. See, it's like a circulatory system, in your body. Your body's circulatory system carries a certain amount of blood, and that's what and it continuously flows through your body. Your heart pumps it around, That's what the economy was like with the amount of dollars that was floating around in the system. It was like X amount of dollars, and those dollars are being used over and over again to cover everything. Now they've injected a whole bunch of newly created dollars into the system, but the system's deflating, so the system is absorbing a lot of this. And also there's a world need for dollars. There's a short squeeze on dollars. But we're getting up there. I would say we're probably about 40% of the way through that. What happens when we get through that short squeeze and there's no big demand for dollars anymore? That's where the hyperinflation starts to come in. That's where the real inflation starts to come in, because it seems like that's going to concur simultaneously with the virus coming to an end and the economy around the world starting to tick up a little bit. I mean, it's not going to continue being pushed down once this virus is gone. What pushed the economies of the world down was this virus. And this virus starts to disappear, and these viruses, just like the 1918 pandemic, didn't last forever. There was another pandemic in 1968 that a lot of people miss called the Hong Kong flu that was really bad. Killed 1 million people. But they don't last forever. They last a year or two. I think the Hong Kong flu lasted 2 years. The Spanish influenza lasted about 2 years, in total. Those were flus. This thing's moving a bit faster than that. It's spread around the world quicker than a flu. And so it'll probably disappear quicker on the other end. When the economy starts to pick back up and heat back up, and it will to a certain degree, it's not going to stay down like it is now. Inflation's going to start to tick up because all this new money creation will be at its climax, and they'll still be pumping more in because they can't pull it away anymore because of the hunger for money by these banks and the Wall Street is just absolutely hungry for money. Look at the stock market now. Let's take a look at the stock market. It's up 24 points on the day, but you notice it's been going along kind of sideways. Let's take a look at the 5-day chart. You can see when it leveled off right here about 3 days ago. It leveled off, and it's been just going sideways on this plateau. That means that all that money that they pumped in to support these markets now, the market has gotten used to it. And the market's not really going up anymore. It's not really going down, but but it's kind of like going along sideways. They're used to this. It's like now they expect it. Massive amounts of money to support the market. They expect that. And if you take it away, what happens? Crash. So they can't take it away. Even when this virus is gone, they can't take it away anymore. Let's go through the markets today and let's take a look at what everything's doing. Silver is up a little bit today, 15.55. So that's looking good. It's up 6 cents on the day so far. Let's take a look at gold. Gold's up $8 at 17.05. Let's take a look at cryptocurrency today. 243 billion for the industry, 67.1% Bitcoin dominance. 8,900 for Bitcoin, and the other coins are right now. You know, I'm telling you, cryptocurrency, it is kind of a weird beast. You know, it's not really a commodity, and it's not really money either. It's kind of a somewhere between a commodity and a currency. It's you know, and it's treated as such. You know, Bitcoin is a little bit more like gold than it is like fiat cash. You know, and it shares an awful lot in common with gold, but on the which is a commodity. But on the other hand, you know, it can be spent like money. Very strange stuff. It's created a new paradigm for the world. You know, this is an alternative money system. This is money. This isn't currency. This is money. It's an alternative money system, and you see there's thousands of these different coins. They've created a structure all their own, and it's like nothing we've ever seen in the world before. You know, and it could be just a matter of time until, because it's money for the internet, it meets the modern age or the modern criteria. And you know, these governments might try to imitate it with their new central bank issued digital currencies. People out there aren't stupid. Let's just leave it at that. The people out there are not stupid. Let's take a look at the Dow Jones today. 24,236. So the Dow Jones is going sideways right now, and it's not going up, it's not going down. It wants more money. It might start to fall off very soon, and it could fall off very steeply. And the Fed will probably try to hold off putting more money again in. You know what I mean? And I could see it testing its lows. You know, but once it breaks down below 18,000, the Fed's already put that in as a floor. So if she breaks down below 18,000, you'll see the Fed step in with something new. Some new way of putting money in to support the market again. This is the focal point of the Fed's attention, is in this market right here. And they're not going to let it go down too low. Okay, let's take a look now at crude oil. $25.43 today. It's up $1.29 on the day. U.S. Treasuries, and we're seeing Treasury yields falling. I've been watching them carefully over the last hour or two, and it seems like they're increasing a little bit, their fall today. We're looking at the U.S. 30-year at 1.4, and we're looking at the U.S. 10-year at 0.70. Eventually, I see these yields going down below zero, possibly all the way out to the 30-year. They keep moving down, moving down, moving down. So negative yields could very possibly be in our future, and not too long away either. But, you know, the imbalance that would create within the system, I just know it's going to create some imbalances that are really out of whack. And so if you think the system's out of whack now, it'll even be more out of whack once they get negative rates. The dollar index today, 99.83. And it's dropped a little bit. Thank you guys for listening. Like and subscribe. Give me a thumbs up. We'll catch you guys in the next show. Bye-bye.